Good morning, let's call it, and welcome to This Week in the Degenerate Economy. I'm Howard Lindzon, bringing you the latest in degeneracy. We're going to open today, as always, with my index that I put together a few years back, up 160%. It's been in a deep correction because of the pullback in, this degenerate trade got very crowded, as I've mentioned, over the last month. But we're in a nice bounce. I'm in a 15% cash position. Let's pull up the positions. Google obviously carrying the weight for me. I'm leading the degenerate economy, and it's the largest position, continues to be in my portfolio. I added Coinbase last week or this week, I think it was. They've been in the portfolio before. Coinbase pulled back from 400 to the low 200s. So obviously I want to get some exposure there. And you can see like the core positions, CBOE, Philip Morris, semiconductors, and Google and Apple having great years. So I have 10% cash position. And if we pull back another 5-10% in the market, I would love to put some of that to work. Okay, let's move on to the biggest stories. And there were some doozies this week. And most of it circles around Robinhood and prediction markets. This is something that seemed obvious to me, that Robinhood rolled out Kalshi as their back end, let's call it, the flow, the money-making part of the trade that is betting and predictions. Kalshi's gone on to raise billions of dollars on this partnership because Robinhood brings them millions of potential customers. I think there's about 1.5 million accounts. And here we go. Robinhood, the enemy of my enemy is my friend. Robinhood partners with Susquehanna, which is a huge hedge fund and liquidity provider and understands trading and markets, and is actually a lead investor in Kalshi. So Robinhood now partners with Susquehanna to build their own backend, let's call it, in layman terms, meaning all that money that would flow to Kalshi will now stay home at Robinhood. I don't know how that wasn't obvious to everybody, but Robinhood, who has built the stack basically for trading and investing and eventually all money and banking, doing it again, using their tech team and engineering and power to go build soup to nuts, the prediction markets in-house for Robinhood. This is a huge move. This will have ripple effects as Polymarket and Kalshi now have to wage war against a complete soup to nuts giant in the prediction markets. One thing that I will say here, you will start hearing the term copy betting. Copy trading is something that's been thrown around for years. A company that I invested in, eToro, has tried to make that mainstream around the world. We have the Nancy Pelosi trackers, all these silly trackers. One thing that you're going to see as growth becomes a key factor for all these brokerages in the degenerate economy is something that I call copy betting. And now that Robinhood plans to launch social, much like StockTwits has social, I believe that copy betting will be a massive trend. And we'll keep following that over the next few months. A16Z just put, I don't know, maybe $1 billion into Kalshi at a 10 billion valuation. I don't know how they didn't see the fact that Robinhood was going to build and launch this imminently. Alex Stanko, who's a friend of mine and just moved from Shopify to A16Z, wrote a really good piece, the meta theme of the 21st century. I don't know if I believe in that as a meta theme. I think prediction markets, as I've been saying, is both a front end, a media product where people can lean back and see what people are betting on around the world, the subjects that matter. So it's kind of a new homepage of news. And but I'm still not quite sure how much betting goes deep. I think everybody wants it to be a meta theme because they missed the Robinhood Web 2.0 theme. So I think there's a lot of money thinking that this is the next big thing. But we'll see. I think it is a massive theme, and A16Z now with their investment in Kalshi has a lot on the line here. I think this is a great interview. Albert Wenger, he is an incredible investor and thinker. I think part of why Google and Apple remain in my degenerate economy is because they're the purveyors of attention, right? Those are the Android and the iOS. That is the drug. That is the platform that is the deliverer of everybody battling for your attention on the screen. And I think this is an incredible interview with Albert, who has been an incredible investor at Union Square Ventures, talking about how capital, and I've said this too, capital has become so cheap, right? Capital is a commodity in this world, right? It gets cheaper to build a company, and everybody wants to be an investor, especially as AI and robotics come in. People will be more and more the investing class. And Albert just talks in depth about what he calls the attention economy when capital becomes so cheap. I think it's an important understanding, easy to listen to, very great investor across multiple themes. And this is a key part of the degenerate economy. This is the chart that's just always interests me. It's just one chart, but this is the poster child chart of the degenerate economy. And, people will look down at gambling, et cetera, and vaping and all these other things, and the aspects of the degenerate economy. But underneath it all is the SEC is the biggest drug deliverer, approving these triple leverage, double leverage, soon to be 10 times leverage, and then single stock futures. I'm just reporting on this. I don't use these products. I've used them in the past. I don't like them. I think they're lazy. I think people should learn. And again, but they are just in the background every day. There's $240 billion now under management in leveraged ETFs. Again, everybody's using them. Most people, I think, are using them for the wrong reasons. I think there's a use case for most products, but I dread these. I'm not talking out against them. I've been there, done that. I think there's a use case for them on the edges, but I mean, you can see we can't get enough of them. I'm going to end with this. Our AI czar, who I don't trust, I think is a complete bust, and time will definitely share this. He linked to a WS Wall Street Journal story. AI related accounts for half of GDP growth. Okay. Again, these are huge numbers we're talking about, but let's take the Wall Street Journal at face value here. A reversal in the AI spending would risk recession. We can't afford to go backwards. Okay, so we've got an AI czar with truly he's built a couple of web apps and a podcast. They sucked at the teat of Trump to get in there. Silicon Valley's nestled into the White House. He's doing Elon's dirty work. God bless. But these people do not know what they are talking about. And this country is so tied right now to this AI bubble, and we can see it in all the financial deals happening between NVIDIA and CoreWeave, and between the Oracle and OpenAI spending. And we're seeing the market catch on to this. And boy, the AI people can get into the White House. And because they can get into the White House, there is thousands of other companies that can't get into the White House. And so the White House is all in on this trade. And I think, this is part of the degenerate economy. Is the White House is the largest degenerate in our economy right now. And they're betting it all on AI, and they're putting it in the hands of a few people. And there is a lot of leverage. We went from Microsoft not having any debt, and Facebook not having any debt. These were cash cow companies, and we were marveling at their cash, to now having debt over the last couple of years, just going out and getting debt to fund these data center deals. So I think there's a huge risk of a recession, but I don't trust David saying we can't afford to go backwards. So be careful out there. There is a lot of leverage in the system. Everybody, thanks again. We'll see you next week on the Degenerate Economy.